Hey, in today's video, we're talking about special provisions federal employee retirement plans. What makes you different? So if you're just a regular FERS employee, then this video is probably not for you. But if you're special provisions, you'll want to stick around. Hey, this is Mel Stubbs. I'm a financial planner at Christy Capital Management, where we're helping federal employees plan for a better retirement. If you need help, click right up here. So getting right into it, there are a few distinctions between special provisions employees that don't apply to regular federal retirees. And one of them is the age at which you can retire. Special provisions employees need to be 50 years old with 20 years of covered service or special provision service. You also could be any age if you have 25 years of that service. Also, mandatory retirement ages apply for special provisions employee, meaning that like air traffic controllers, they're forced to retire at age 56, while firefighters and law enforcement, they must retire by age 57. And so if you want to work past this mandatory age, you'll have to get special permission in order to do so. Another difference is the percentage that they get paid on. For the average federal employee, they're going to get 1% times their high 3. But for a special provisions retiree, they're going to get 1.7% times their high 3 for the first 20 years. And then they get the regular 1% for each additional year after that. So you're really doing the heavy lifting for the first 20 years of work. And then after that, you're only getting the 1% a year, just like everybody else. Another distinction with special provisions is there's an earnings limit rule for the special retirement supplement. So for regular federal employees that retire under the age of 62 on an immediate annuity, you can get a special retirement supplement. This is money that's set aside that's addition to your FERS pension. All special retirement supplements will automatically stop at age 62. So the difference with special provisions employees is that prior to their MRA, meaning their minimum retirement age, which is usually around 57, there will be no earnings limit. So for instance, a special provisions employee could retire at age 50. They'll get an immediate annuity. They'll get the special retirement supplement. They could go get another job and earn as much money as they want all the way up until their minimum retirement age as FERS views it, which is around 57 years old, with no earnings limit. Now, once you hit age 57, the earnings limit kicks in and you may start to lose some of that special retirement supplement at that point. For regular FERS employees, the earnings limit kicks in immediately. But for special provision, it only kicks in after the age of 57. So there's some time there that you could almost triple dip, where you get your pension, you get your supplement, and you could go work if you wanted to. Now for air traffic control special provisions employee, there's a Vision 100 versus your regular special provisions decision that you're going to need to think through. That might be a little too specific for this video, so if you need help with that, reach out to us at christycapital.com. Another thing about special provisions retirees is that since you generally retire at an earlier age, it means that your survivor benefit decision can make life insurance more affordable because you're younger age. We've done other videos detailing the consideration of using life insurance as opposed to doing the full survivor benefit. Permanent life insurance is a fixed cost that doesn't change over time. It's based on your health and your age at the time that you get the policy. So with special provisions employees that retire, being able to retire as early as age 50, sometimes even earlier than that, it could make life insurance premiums be less because of the younger age. As a general rule, if the life insurance premium is in the ballpark of what the additional 25% of the survivor benefit would be, then life insurance has some advantages and would then likely be the better choice. If the life insurance is way more expensive than the survivor benefit, then a lot of times, that makes the survivor benefit more attractive option in that case. The fact is, your younger age gives life insurance a better chance of being more affordable. Another distinction that special provisions retirees need to think about when you retire is what are you going to do with the TSP? If you move your entire TSP to an IRA before your age 59 and a half, which all special provisions employees would be retiring younger than 59 and a half, there would be a penalty if you take a distribution from the IRA. So typically what's done is that the majority of the TSP is moved out of the IRA to get what people deem the advantages of the IRA. But we need to leave some money in the TSP so that if you need to take a distribution from your retirement money up until age 59 and a half, you could do so with no penalty from the TSP. You always have the ability to roll some IRA money back into the TSP if you need to take additional distributions, as long as your TSP balance never hits zero. We've done a lot of videos talking about tax planning and trying to shift money from traditional to Roth. And since special provisions get to retire earlier, that gives you more time to start doing some of that shifting. One of the little nuanced ways to work this out is that you can do a Roth conversion from your traditional IRA to a Roth IRA and not withhold taxes, because if you withheld taxes from the Roth conversion, it would be penalized because you're under the age of 59 and a half. Then you can go to TSP and take out a distribution for the tax amount and request that 100% of the money be withheld for taxes. That's the backdoor way of doing a Roth conversion and not withholding any taxes, but have the taxes withheld from the TSP. The special provisions employees retire at a younger age. This gives you more time to do the shifting before you reach your RMD age, which has now been shifted out to 75. If you're just now hearing the importance of Roth and you want to get started, but you're wondering, is it too late to do Roth, then check out this video right here. Is it too late to start Roth? If you need individualized help, go to ChristyCapital.com, click Talk to an Advisor. Make sure you check out our monthly webinars on federal retirement planning. You can do that by going to ChristyCapital.com/webinar. My name is Mel Stubbs. I'll talk to you next time.